going to show you guys the simplest A+ ICT model checklist. There's 3 things that I look for within this checklist. Where is price going on the higher time frame? I'm looking to find a draw on liquidity. Is price reaching for buy side liquidity or sell side liquidity? Step 2, hunt for a change in the state delivery at liquidity. Step 3, add the time element. It's not required, but it's something that we could use as confluence. So let's utilize the higher time frame to find a draw on liquidity, and I'm going to show you guys the exact step-by-step process to do that. On a weekly time frame on the S&P, on the NASDAQ, we're in new price discovery. Price is at all-time highs right now. There is no way to frame higher time frame bias on a weekly chart because price just keeps expanding higher. It's already expanded above all of the old highs. There's nothing to aim for. Okay, let's go down to a daily then. Same idea on the daily. There's nothing to aim for. Price is just at all-time highs. When you cannot frame a bias on the 4-hour, the daily, the weekly time frame, you have to rely on lower time frame charts as your higher time frame bias. So I'm going to scale all the way down to an hourly or sub-hourly time frame for my higher time frame bias. The other day and this morning, I used a 15-minute time frame for my higher time frame bias. So when you hear higher time frame bias, don't think it has to be a daily or a weekly chart. You just need to know where price is going, and then on a lower time frame than that, hunt for entries. So on the 15-minute time frame, I'm using that as my time frame to figure out where price is going, and I'm using a specific signature for the entry model and to find the draw on liquidity, and that is a change in the state of the delivery. So we have consecutive down close candles here. I'm waiting for price to break over those consecutive down close candles. So notice how we have these 2 consecutive down close candles here. We do have 3, but this one didn't go beneath this one, so that doesn't matter to me. We have 2 in a row, and then price expands over those 2 down close candles and breaks above the open of that and creates this bullish fair value gap. So since it creates that bullish fair value gap, this indicates a change in the state delivery. And what ICT taught in the 2022 mentorship, that when we get this order block creation, it creates a change in the state delivery, and price moves from sell to buy program. So it's going to start targeting old highs. Where is the nearest high to target? We have this high right here. This high is at 4933.25. So I'm utilizing the change in the state delivery to indicate that this has put in a smart money reversal of a market maker buy model. So it's likely to put in a low here. Why? Because it took out liquidity. So once it takes out liquidity and creates this change in the state delivery, I'm looking for old highs to get targeted. Because if smart money buys the sell stops, they're going to need to target buy stops to sell to buyers at a higher price. Okay. So I'm utilizing this 15-minute to indicate that price is likely to trade up to here. Well, what can I do now? Well, now I can go into a lower time frame and hunt for this same exact model at liquidity with the bias that price is heading up to here. So notice I'm using the 15-minute time frame to indicate price is likely to head up to here. You don't always have to have a 4-hour bias for your higher time frame. I'm using a 15-minute bias. So if we go over here, this is where I framed an entry today, and I got in near the low and I sold above a short-term high in here. Just a very, very easy target, but I was utilizing the idea that price was likely to draw up into 4933.25. Before we look for a change in the state delivery at liquidity, look at the liquidity part. What time frame should you look for that liquidity on? You could look for it on a 1-minute. The most high probability setups will occur when price takes out a pool of 5 to 15-minute liquidity. Not that you can't find high probability setups after it takes 1-minute liquidity. It's just, especially if you're new and you're hunting for it at very small levels of liquidity, you're going to be offside. So I'm just teaching within this model. Look for it on the 5 to 15-minute time frame. What is liquidity, Dan? Well, I'm looking for an old low to get targeted. So we have this old low right here. We also have this old low. I'm looking for that liquidity to get taken out. Retail sell stops are resting beneath here. They get triggered. Smart money buys those sell stops on this wick to the downside. Turtle soup occurs in here. Starts to expand back higher. Notice here, price breaks above these 2 consecutive down close candles and creates a bullish fair value gap. Now, since it created a bullish fair value gap and broke above these 2 down close candles and expanded higher after taking out the liquidity, and we have a bias that price is likely to head up to 4933.25, I'm now not anticipating for this low to get traded to because it already purged the sell stops. It already took out these sell stops and expanded away from it, creating a fair value gap. So when price opens up at 9:30, I'm utilizing the idea now that the 15-minute wants to head up to here. And now on the 5-minute, it created a bullish change in the state delivery after taking out liquidity. So it's not likely to head beneath this low. So this is when I will mark out a protected low, or PL, because I'm not anticipating for that to get traded too. So now I'm scaling down to a 1-minute time frame. And now I don't need to see this sell side liquidity get taken out when price opens up at 9:30. So this is 9:30 New York time. You could utilize manipulation beneath that 9:30 open before expansion. You could also incorporate the macro, which I'm going to talk about in a second. But that's why at 9:30, I'm not anticipating for this low to get traded to and then create the bullish setup and expand higher, because it already appeared at 8:30 at liquidity. So this is a protected low in here. Doesn't mean it's always going to be a protected low, just more times than not it is. So at 9:30, we get manipulation up first, then manipulation down. This is forming the inducement leg of the breaker. So it's inducing retail long. Starts to expand back lower. We run this pool of liquidity on the 1-minute right here. Price expands beneath there. What's the model I'm hunting at liquidity? Well, I'm hunting for a change in the state delivery. So the same model that we use for the bias on the 5 and 15-minute time frame, we're now going to use on the 1-minute time frame. So see this 2 consecutive down close candles right here? I'm going to mark out the open of that. I'm waiting for price to close above there and create a bullish fair value gap. Once it can create that bullish fair value gap and breaks above the order block, that indicates another change to the state delivery, because it took out the sell side liquidity here, and it's likely to start targeting old highs now. So this is where in my Discord, I did alert 2 Discord members that I'm looking for this to put in the smart money reversal of a market maker buy model. And what that looks like for anyone new is that price creates the sell side of the curve. It leaves behind old highs. The smart money reversal puts in a significant reversal point, and price starts to expand higher and aims for these highs to get targeted. So I'm going to show you guys an inside look in the Discord and some of these plays that we called beforehand. This was from the other day. Like I showed you guys how to frame a bias. This is what I showed Discord members, that the 15-minute bias was likely for price to trade up to this fair value gap and this buy side. Also, on the 1-minute the other day, I did show this inversion model setup, where basically I was just using that as feedback from the algorithm that these highs were likely to be targeted. Got a nice entry on those, re-entered at that low right there, and then targeted the buy stops above. If we skip to today, we did have some more nice setups. We had a bearish breaker at open. I said interested in NQ heading for these equal lows right here. Once it took out those equal lows, I didn't get an entry on that setup, but the exact setup that I talked about in this video, I did cover in my Discord beforehand. So at 10:20 a.m. ES on the 1-minute time frame, seeing if this can put in the smart money reversal of a market maker buy model. Like I said, a market maker buy model, I explained that, but I also said the smart money reversal is just the key reversal point. I said sell side liquidity has been swept. We used an SMT as a confirmation, and it was likely to start targeting all of these old highs in here and then that 15-minute fair value gap. So I don't have a signal service, but I do alert where I believe price is drawing towards pretty much on all time frames on the S&P 500 and the NASDAQ every single day. So you can see this was where I alerted at. This is at 10:20 a.m. and then price expanded all the way up to there. So there's just 2 plays for today, but nice setups. If that's something you guys are interested in, there's a 3-day free trial link down below. So when we get that change in the state delivery, price creates the fair value gap. This is an entry. And where can your stop be? The safest stop is going to be beneath the change in the state delivery low. You could have it beneath candle number 2 of the fair value gap. So these are 2 potential levels for a stop loss placement. Just find whatever works best for you. The safest stop is going to be at this swing low beneath the 2 consecutive down close candles, which is a bullish order block. So I'm entering here, and then I'm putting my stop beneath this low. And you guys are going to see the execution video. Might have to take out the background music just for copyright purposes. But you'll see how I traded this long right here, utilizing this logic, and I targeted this original consolidation, because this is where price reversed. It expanded away from there, and there's relative equal highs up there. So I'm looking for that to get targeted. At the same time, it's aiming for up here. So I could have held for up there. It's a Friday. Already had a good week. I just want to get out at an easy target. So I enter down here and I start to target this high right here. And I believe I exited a little bit above that. So you can see that this 15-minute, if I go back to a 15-minute time frame, This is an old high in here. That's where I exited, right at that little minor high right there on the 15-minute. If you go down into a 1-minute chart in here, you'll notice that that's a more significant high. So price moved away from there. But that's what the checklist looks like. Now for the time element, we can mark out 9:30 and we can look for a Judas swing, which was in my last video. If you guys want to go check that out. At 9:30, price can manipulate in the opposite direction of the bias, which it does right here. So it doesn't mean at 9:30 it immediately has to rip lower, but just in and around that time, we'll get expansion in the opposite direction of the bias. And then price can start to create that change in the steady delivery and start to deliver higher. So we can mark out 9:30, look for price to trade beneath that. I'm just looking at it as manipulation, smart money buying retail sell stops before targeting higher prices. On top of that, I can wait for the 9:50 to 10:10 macro. Now ICT talks about at the end of every hour, so from 9:50 to 10 o'clock, so last 10 minutes of every hour, and then the first 10 minutes of every hour, there's a macro. So in total, it's a 20-minute macro. It's from 9:50 to 10:10 and so forth, 11:50 to 12:10, 1:50 to 2:10, right? Stuff like that we can mark out. So I'm going to mark out the 9:50 to 10:10 macro. And this is just a period of time where you can add as a confluence for a potential setup to appear at. Doesn't mean it's always going to appear at this time. I have noticed a good amount of times it does appear. So if I'm not super confident at 9:30, sometimes I'll wait towards the 9:50 to 10:10 macro, or I don't even have to not be confident at 9:30. It's just a good time period to wait for, because typically a setup will have already appeared and it's already reaching for liquidity, or a change in the steady delivery can occur during this time period. So I utilize time aligned with price here. You can see price expands for the buy side target. So in short, I'm looking to see where is price heading. Step number one, where is it going on the higher time frame? Our higher time frame bias on the 15-minute suggests buy side liquidity, where this eyeball is. So that's step number one. Step number two, hunt for a change in the steady delivery at sell side liquidity. So we get the change in the steady delivery here. That's where I long. We also got a change in the steady delivery down here, so I utilized that as a protected low. Price was not likely to trade beneath here. Step number three, we could add the time element, which I did right here, and then we just use that as an extra confluence. All of this gathered together helped me frame a 2R trade, and I obviously called it beforehand like you guys saw in the Discord.